Hey traders, back to another recap. I actually ran out of idea where should I put my camera, so I just put it on top of my shelf. So yeah, just share my two losses yesterday. I actually lost about 21, close to $22,000 on my Aussie dollar short and Aussie dollar long, and also my Aussie dollar short position. So let me go into detail. So I'll run through the entire thought process. Why did I take a loss, and why do I think it's a worthwhile risk? Because I have a long-term game plan on two of these setups. So if you look at the high time frame, especially on the weekly on Aussie dollar, the main reason why I decided to take a long position, and we have actually been eyeing this setup for a very long time inside our trade club. But one thing that we did not expect was the extreme low volatility in the market. There's no clear momentum. It's not moving at all. And that's not something that we can predict. The only thing we can do is we test it out. We actually try and test out the setup, take the trade, and see whether if it's going to be, if the momentum is going to come in today, next week or whatnot. We can't really predict that. So on a weekly, Aussie dollar has been holding above this major weekly support zone for a very long time, mainly 0.64, 60 to 70 area. So that's one of our key trigger. So when it comes to confirmation, when price is holding above some of these major weekly or daily support, it just tells us that the market structure is very well intact. So now we go down onto the daily. You can also see that we've had multiple rejection around this point 64.50 to 64.70 support zone. So that's a very good indicator. So for us, when it comes to setup that offers such a good price position, we are naturally attracted. So price then formed multiple reversal from here, and it started pushing above that 0.6522 zone. So we essentially have a key level reversal on the weekly, and we also have a following break of structure at 0.6524. So that to us is like double confirmation. So when we have two confirmations combining price forming a bull flag above 0.6523, I decided to pull the trigger. I risked about 13,000. It's actually just $12,000 on this trade. But because I held the position for some time, so commission swaps actually take some money as well. So I eventually took a full loss on this. I actually held this position for multiple days as well, since Thursday, Wednesday, all the way until yesterday, which was about 3.5 trading days. I took a full loss, took about $13,000 loss on this one, and I'm okay. So every time I want all of you to understand, when you take a loss, the number one thing that you should be thinking is not, should I go back in? It's not, oh, should I change my direction? Most of the traders, when they take a losses, the number one thing that they do is they say, can I sell? And when you start having this kind of mentality, it gets extremely FOMO. As in, oh, should I do something? You are being overly reactive, but what you should really be doing is just sit there and say, okay, what's my game plan? And that's why for every single decision-making process, from the entry model to the re-entry model to trade management to skill in to whether we should hold this position for swing or whatnot, everything's mechanical. And for this specific position, you might be thinking, hey, at the peak, you were running like 2.7R. Why don't you secure it? This is hindsight. As a trader, hindsight is the most useless thing, because everyone can say that after the position's either getting stopped out or something happened or whatnot. So I'm happy to take a full loss on this one. I'm actually happy, and I'll see if Aussie dollar will eventually offer a re-entry or not based on our re-entry model. So the second loss that I took was dollar CAD. This is still okay because I took a small size on this one as is flagged based on our system as an aggressive reversal entry as well. If you look at the weekly chart again, the main reason why we were bearish on dollar CAD, it was based on a few reasons. The number one reason was because dollar CAD has multiple reversal from this major resistance at 146.20. And besides that, unless you're inside our trade club, if not, actually for since the beginning of the year, February to March of 2025, we have already started calling reversal, and including myself and many of our traders actually secured many R's by shorting them all the way from 144.46 to 142.68 break and retest to a lower high entry at 1.4. So we've shorted multiple times, but every single time when you shorted long, market would somehow come to a halt. And that was when in, I think it was August to September, that was when we realized that dollar CAD was offering a higher low here, and we just couldn't break below 137.60. And that was the time where we actually flipped long and say it's bullish. And that was also the time, coincidentally, where DXY started pulling back. So now if you look at DXY, we're still holding below this major daily resistance at 100. So this is technically still bearish, but we're just seeing some pullback. So just a general tip here, you can also judge the long-term trend by looking at the angle. So if you look at this sell-off here versus the angle of the rally, you can clearly see that the angle of the rally was a lot shallower. So let me draw it for all of you. You can see that the angle of this entire, for some of you, especially if you're trading on the short term, you might think, oh, this is an uptrend, but the angle is not steep at all. It's quite shallow. So probably 45 degrees. So yeah, when you see this kind of rally, this kind of trend, usually it's just a long-term retracement. So just a general tip here. So I'm still fairly confident that we're going to see dollar CAD starting to sell off in the following few weeks, but we can't exactly tell you when. I can't exactly predict when. And for every single elite traders, they will always know one thing: no matter how accurate, no matter how profitable you are, market timing or so-called entry timing is not something that you can predict 100% of the time, because there'll be times where you take the trade, there's no actual momentum. When you take a trade just to realize the volatility is holding, when you take a trade just to realize the market condition the next day, the next few weeks are actually messy. So these are things out of our control. What we can do is we take a loss, we assess things from the most possible objective point of view and see if there's any valid re-entry or not. So for dollar CAD, I'm still waiting for a re-entry, and that's pretty much it for the recap. I'm sharing this recap to actually tell all of you how I personally took like $21,000 loss, and I'm okay. I'm actually fine with that. You know, I know many traders, you might be sitting there thinking, hey, Neoh, you just took like $20,000 loss. How can you be so calm? It's because, again, it's just a relative small percentage compared to my portfolio. And my portfolio right now is well beyond 7 figures. So if I take like $21,000 loss, if it's just based on $1 million capital, it's only like 2.1% drawdown. So it's really not that much. It's a lot of money, I know, but it's okay. It's well taken care of. So yeah, that's it for the recap. I hope you all learned something new. If you like, don't forget to like, share, subscribe. If you're looking for a platform to grow together, you can consider joining the 1% Academy. Link in the description. So that's it. Bye-bye.